Now, as far as the stock market goes, everybody keeps saying, what do you think is going to happen? What do you think is going to happen? I think the stock market is going to be one of the biggest collapses we ever had. We're just started. Remember, I told you this was going to start on when I said the first setback I said would be, and I announced January 16th that I said we'll get a 5% or more correction. But I said, mark this down. This is the beginning of the stock market crash, okay? But it takes time before it capitulates. In 1987, when we had the 500-point, the biggest one-day drop in history, which has now been beaten. We dropped 700 some odd points, which was it? I forget when that was. But anyways, the point is, they can't drive this market any higher. Once you start, just remember, when you start with zero interest, okay, and the stock market crashed like this, right? Market crash. Remember what zero interest was. Zero interest was QE. There's two things they went to. They went to quantitative easing, okay, which is all it is a confidence. It's just to rig confidence into people. What's that mean? When the market dropped and they stopped it from going down, they had to get, people were broke. They lost around $13 trillion between their stock equity and their home equity. They had to make them feel good. So the first thing they dropped interest rates to zero. Then they printed $22 trillion, which much of that went into, instead of doing a recovery, which would take too long, which was wrong. They should have went to a recovery. Okay, instead of the recovery, they decided to go to a propping up of the market, zero interest rates. They took $22 trillion. They plowed the first thing, $3 trillion right into the market. Then they kept plowing more in. A lot of that money went to the central banks around the world with the promise they would come back over here and buy our stocks. And that's how the market started to go up. It was all rigged on QE, okay? Now, the problem with QE, so you understand, the federal government had to print money, okay? And the big thing it had to do with that money is to get the interest rate down. We were paying 3.7% on our national debt at that time, which was what, $9 trillion. Unfortunately, we're spending, like today, more than we're taking in revenue. And when you're spending a lot more than you're taking in revenue, like today, 35%, 30% more, 3.7% was too high. We can't pay that kind of interest. So they had to get the interest rate from 3.7 down to 1.7, okay, or the market would have kept crashing. They did that by printing the 22 trillion, and they went out and they bought treasuries. When you buy treasuries, the interest rate goes down. When you sell them, the interest rates go up. So what they did is the balance sheet of the Federal Reserve, here's the balance sheet. Now it's filled. They have no more room. They filled it up right here. It's all filled with treasuries. $6 trillion in treasuries. So the danger is, if the market crashes today, the reason why it's going to go down 50, 60% instead of 25 or 30, because they waited so long. They waited so long, okay, to stop the zero rates. Okay, and they got to sell these treasuries off the balance sheet. They can't borrow or print money because their balance sheet's full. So here's the balance sheet. Here's the top of the balance sheet. Okay, here's the bottom of the balance sheet. It's full. Okay, so just so put this in perspective, why this market's going to have such a severe crash. So there's the top, the balance sheet. Here's the bottom of the balance sheet. When the market went into a crash, remember what the balance sheet looked like. It looked like this. Okay, when the balance sheet, when we crashed the market in 2008, the balance sheet looked like this. Let me show you. It looked like this here. Okay, it was like this. The amount of money was on the balance sheet was like this. Like that, about a quarter of it. So by printing the money, they go out and they buy treasuries. They go to the treasuries, they buy it. Now the rate starts to drop. Now what happened, we went from this amount right here up to this amount. Our balance sheet is chock full. Market goes to crash today, we can't drop the interest rates because the Treasury can't buy them. They can't print 22 trillion and buy the treasuries to drop it from 3.7 down to 1.7 because it's full. If they started to sell these treasuries like they should have in 2010 to 2018, we'd be back down to a quarter. This is what Trump is worried about. This is what everybody's worried about. If this market crashes right now, okay, we can't go. They can't bail us out. They can't bail us out. They can't pull that interest rate down. Here's what's going to happen. Why the market's going to drop 50, 60%. Instead, what are they doing now? They got so greedy with 0% interest that they could push the stock market up 350%. Wasn't enough 150%, 85%, like the other two bubbles. They wanted to push us up 300%. They want to get so wealthy. So they only could do that by keeping interest rates at zero. Now the problem is they got to sell these treasuries. When you sell treasuries to get the balance sheet reversed, to get it back down like this, when you sell treasuries, the problem is the interest rate goes up. And that's why our interest rate is going to go to 5%. That's why there's no way to avoid a huge stock market crash. You can't have, we're at our 10-year treasuries at between this week it's been around 3.15 to 3.20. Impossible. You go to 5%. Look what's the damage that's in the market already. Look right here. Look at the damage. And that's at 3.20. You imagine we get up to 4.5, it's going to just keep crashing. They got so greedy, instead of selling these treasuries starting in 2010, 2011, so that we'd be down, now they waited so long. The companies, everybody's so used to not having interest. Now here's the real problem why the market's going to also crash. You got $8 trillion in debt. The corporate debt is the highest corporate debt we ever had, $8 trillion. Well, guess what interest rate they were paying? Zero money to do $6 trillion in stock buybacks. That's what pushed their stock up. Now they got to pay for it. It's not 0% anymore. Now they're going to be paying 370 points, say between 250 and 370 points. That's zero. That's going to take their earnings and crush their earnings. That's another problem. So we got the earnings going to be crushed, going down, and you got interest rates going up. That greed between 2008 or 2009 and 2018, everybody got rich. They're going to put all that money in their pocket. Now they're going to sit back and just let the market collapse, and they're going to buy stocks, the best stocks for almost nothing. That's why the rich always get richer and the poor get poorer. So that's why the market's going to crash, because the interest rates have no place to go but up because they're selling the treasuries. Okay? We're so screwed. It's unbelievable. Join my gang, Phil's gang. Regardless if the market's going to go up or the market's going to go down, you'll have a good night's sleep.